to do the tutorial question with relation to the indirect method. I decided to do it in order for students that asked me for assistance in relation to accounting. And Guti, when we get to class and we're having the tutorial, you are more at ease, you're understanding more, or you can sit after class and then try and connect the dots of what we're doing in the tutorial or what we were doing in the tutorial. So this video is specifically for first year students because they have this question in their question bank. So yeah, we have this question, right? I went down and drafted everything, but we're going to be doing until net cash generated from operations, and then I'll post the next video where we're doing the bottom part of the cash flow statement. So okay, let's start really quick. Okay, I want us to start here with the working capital. I just want to give you an analysis of how you do this part, right? Okay, so your working capital, for example, let's have inventory and we have a positive minus sign, right? So your inventory will increase on the side and decrease on the side. And then we're going to have our bank account. And then accounting term says that for every debit entry, there's a credit entry. This is the simplest way to understand this. Back to our basics. And if for every debit entry there's a corresponding credit entry. So for a decrease coming on the positive side of the bank account, meaning that our account is increasing, meaning that we're having a inflow, and then this side will obviously be an outflow. This is why outflows are always bracketed. This is why with this one, the outflow, the increase of inventory is in brackets and the decrease is without brackets. This is where it comes from, right? So we're gonna look here on our statement of financial position. Inventories, it was 650 to 880. We have an increase, meaning that we're gonna have 230 as the difference of these two. You're gonna calculate it and you're gonna get 230. So for first one we have 230, and then this 230,000, it's going to be in brackets because there's an increase, right? Let's move on to trade receivables, and trade receivables increased with 100,000. So because it increases, it's gonna be in brackets, so we're gonna have 100,000 in brackets. Okay, I want us to move on to stationery on hand because it's part of the asset. Because stationery on hand is an asset and then stationery expense is an expense, we're looking for the difference here. So it increasing means that we're going to do what? Put in brackets. So the increase is 20,000, meaning that we're going to have 20,000 increase of stationery on hand. Now, remember, increase in assets will always be in brackets, right? And then now let's move on to our liabilities. Our liabilities, we have trade payables and it has increased by 80,000 because it's a liability. It's not going to be in brackets. And then our accrued expenses increased from 15,000 to 40,000, which is 25,000 difference. So we're going to have 25,000, but it's not going to be in brackets because it's a liability. An increase in liability doesn't have brackets. It's not an outflow, it's actually an inflow, right? So please make sure you understand this part, because if we're given the indirect method, we'll always be calculating the working capital, change in working capital. But please pause the video and see if you understand, and then let's move forward. Profit before tax. So they gave you the profit before tax, and they said it's 790,000 here. So you're gonna have your 790, and then moving on to adjustments. So the adjustment part of this adjustment part is all the non-cash items. So you're gonna have your depreciation, your profit before tax, profit on sale of asset, your loss on sale of asset, your credit losses, allowance for credit losses. all of these cash items will be allocated here, right? But the signs of them. So since depreciation was subtracted in your profit before tax, it was subtracted, meaning that all your expenses, you're going to add them. So we have a total of 0. So all expenses are added, and then all incomes are subtracted, right? So your depreciation amount, how do we get your depreciation? You go to accumulated depreciation. You look for the difference between the accumulated depreciation. So you're going to have a difference of 260,000, meaning your depreciation will be 260,000. It's a positive sign because what? Because we are, because it is an expense. Now you move on to adjustments here. Furthermore adjustments. So this interest expense falls under this part. Adjustment that were previously separated. This one, right? So we don't have interest income, dividend income. Dividend income is dividend income, not dividend paid. So please don't add dividend paid here. So I wrote this in a red pen to remember Kuti, not dividend paid, dividend income only, right? So your interest expense is from that part there. How do we get your interest expense? They told you that your finance costs are 30,000, right? So you're gonna have 30,000 for your finance costs. And remember, I told you the signs, and they did tell you here your interest expense, it's not subtracted. You see, yeah, and you just understand it with the same mentality of depreciation. So now we're done with the top part, meaning we can calculate our cash generated from operations. So we're gonna say 790. Yes, we're having 835. Right. So now let's move on to our income tax. Let me pause the video and then erase this part in order for us to do our income tax. Okay, so our income tax. You wanna open your T account, SARS, income tax. And then since your income tax amounts are on the liability section, it means your signs are what? Minus, plus. So your balance at the beginning will be 180, 240,000. And then they tell you here that profit before tax has calculated after deducting the income tax expense for the year from the profit before tax, meaning that this 550, the difference of it and the profit before tax is the income tax of the year. So you're gonna say 790 minus 550, which is equals to 240, right? So this is your income tax. It obviously increases, so it's gonna be 240, and then another 0. You're gonna balance both your sides, and you're gonna have 420. 420,000. So you're gonna have 420,000 minus this 240, and then you're gonna have your bank account amount, which is 180. Why is it 180? The 180, I knew that this and this cancelled, meaning we're left with 108. So when you come tax is 180,000, right? So it being 180,000, it's obviously going to be what? It's going to be subtracted. Okay, let's move on. So now we have our dividends paid. Our dividends paid. So our dividends paid, what we're gonna do is we're gonna open a T account again. Shareholders for dividends, and it's a minus or plus account, and we have our balances here, and balance at the beginning is 80,000. Beginning, and your balance at the end is 240. And then, okay, let me explain this dividends thing. For dividends, remember that with a cash flow statement, we're looking for inflows and outflows. You remember that part, that we're looking for inflows and outflows, meaning that because we declare last year, we declare uh, what we declared will obviously pay at the beginning of the financial year last year, and then we're gonna pay our interim, and then at the end of this year we're gonna declare the dividends at the end, meaning we didn't pay the dividends at the end. So you see this dividends that they gave of 208.30, it is dividends paid and declared, not dividends paid only. So you have your interim plus your final dividend for 2022 June 30 included in the 230. So let's start here. 230,000. Right? We have 230,000. So from the 230,000, you're going to subtract 120,000. Where do we get this 120,000? We go back this side. Shareholder for dividends at the end of the year declared is 120,000. These are the declared ones. These are the ones we're still owing, hence they're under liabilities. So we're gonna minus 120. Right? I don't even know where I was getting this 240. It's supposed to be 120. Yes. So you're gonna subtract your 120, and then you're gonna say 230 minus 120. And you have 110. Yeah. So then you're gonna take this. So this is your interim of the year. Now we want the final. The final of last year will be 80,000 because we declared it last year. So you're gonna say 120 plus 80,000. And how much you're gonna be left with? 190,000. Meaning your dividends paid is 190,000. Obviously in brackets. So then let's check if we've done everything. We have our interest paid. We're supposed to have our interest paid again from this part. Understand? Yes, you have your interest paid. You're subtracting it this time. So we did interest paid. Okay, let me erase this part because you'll pause the video in order to get the calculation. So we're gonna have interest expense, and you're gonna add it, subtract it. So we have a 0. This becomes 0, right? And then now we're gonna have our net cash operating activities. So let me calculate that off camera so I could save time of the video, because already some time has passed for this question. Okay, so this is the calculated amount for our net cash from operating activities. In the next video, I'm going to start from this part of net cash from operating activities and do the financing and investing activities, and it's just two parts. So the video will be like 5-6 minutes, very short and straightforward. And then I'll be explaining the changes in cash and cash. I hope this video helps out, and this might give you the distinction you need for your final exam this year. So good luck with everything, and I hope you're getting the same amount and you're understanding. If not, please pause the video and go back to the video and calculate again, and so on, and go through the steps over and over again. If you're finding easier methods, please let me know, so that when other people are asking for assistance, we can give each out easier methods and understandable methods than the way that I came up with it. But I hope this one is the easiest. If it's the hardest, please let me know, and I'll explain again and again and again whenever I get time, because yeah, no. Yeah, we need to save the semester. So okay, bye and ciao.